request that you mute your microphone. Okay. So, welcome all to our free forex trading. And today we shall be covering a very interesting topic: how to trade like a sniper. Can I request whoever is on the road to mute the microphone, you or just everybody, just mute the microphones. Okay. Mute your microphones, please. Okay. All right. Thank you. All right. So I was saying that today we shall have a very interesting topic, and the topic is how to trade like a sniper. Um, so I will first start off with a bit of background information, and then we'll build up on that discussion. So first, when somebody says they want to trade like a sniper, really, what do they mean? Okay. Every day, thousands of people get online and they chase the market. They chase the market. The market is going up, so they chase it. The market is going down, they chase it. You know? And whereas sometimes it works, most of the time it doesn't work. Unless you know exactly what you're doing, most of the time it doesn't work. Okay? Because we are busy, you see the market saying it's going up, the charts are going up. So what do? You jump in. And more often than not, by the time you're in and you're actually trying to go up, the market's already turning against you, and vice versa when it's going down. So, is there another way? Is there another way where somebody can trade without literally chasing the market? And the good news, my friends, is yes, you don't have to chase the market. You can sit and you can literally let the market come to you. It's as easy as that. You can sit and let the market come to you. So that is what we want to discuss today. So that for many of you who have been struggling to trade and often trying to chase this elusive market thing, you can actually do the opposite now. You can actually sit and wait for the market. And this has a very high success rate, especially the method I'm going to teach you. All right. So, who is a sniper? A sniper is a person who um, sits and waits for their prey. They don't run around. If you've heard of guys who've gone hunting, and they're snipers or something, they don't run around after the antelopes or after the lions, whatever. No, no, no. They sit somewhere, maybe set a trap somewhere, and then they sit maybe on a tree, and then they wait. It's a waiting game. They wait. Finally, when the animal or whatever they're trying to catch appears or shows up, then that is their moment to jump into action. All right. So it is with that idea that we are going to be learning how to trade. The idea that actually you can sit back and wait until the market comes to you. So you decide where you will sit. All right. So having said that, then what I will do, I will go to the market. Okay. And by the way, this method works perfectly well with what I had mentioned before, the breakout strategy. It is one of those methods that works almost in tandem with the breakout strategy. So what we shall do, we shall get to the market. And remember, you don't need to have any other prior knowledge to trade like a sniper. You don't need to have known what's going on. You absolutely don't. All you need to know is there is a market and it's moving and you can't keep up with the market. So you will pick a position and wait, and the market will come to you. When it comes to you, you take profit. All right. So we'll jump to the market and then we will explain a little more on how that works. So I'm gonna see, I'm gonna get out of this sharing mode. All right. Then I'm gonna share the live chat. And this can be on any platform. You can do CTrader, you can do whatever platform you normally use. Okay. So CTrader. Okay. There we are. Okay, now we are on the CTrader platform. So I'm going to remove any kind of marks that may have been there before and just show you that it is a naked chart like that. Okay, so here's the chart, and essentially it can be any time frame, but if you're going to be doing the sniper trading, I'll explain to you when is the best time to actually do it. So what you do is you come to your chart and you probably look at a higher time frame, which would be like 4 hours. 4 hours is perfect. Okay. And then what you do in the 4 hour, okay, trying to make it small so that you can see as far as possible. Okay. That might be a bit too tiny. So I'm going to make it a little bigger. All right. There. Okay. So what we shall do on the 4 hour, okay, I will show you what exactly we're saying. Now, the whole idea of waiting for the market to come to you means you need to take a position. What does that mean? It means you find a place and you sit. And when you sit, you wait. So if this is a map, the chart, I would probably look at a point where the market doesn't seem to be moving much. So if you look at the right hand side of the screen, I don't know if you can see that. Can you see here where I have the cursor? Can you see it?
We can
Can you see that?
see.
Okay, good.
Yes.
Perfect. Okay, good. So what I will do is I will try and draw like a rectangle or two parallel lines. So maybe a rectangle might be easier. And at this point, you include even the wicks. You draw a rectangle around there and you include the wicks. So something like that. So as you can see, this is a rectangle and it is touching the top of the wicks. That's the first top and bottom of the candle. Okay. And inside there you have, let's say 1, 2, 3, 4, 5, 6, 7, 8, 9. The 9 candles inside my rectangle. Now remember, it doesn't have to be perfect, but the whole idea is to be able to put a rectangle around those candles so they are all within, they are enclosed. Okay. So at this point, then you ask yourself, for the last, these are what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 9, 10. 10 times 4, that's 40 hours. For the last 40 hours, 40 hours is like almost 2 days. Okay, in the 4 hour charts, in GBP USD, this market has just been going between this high of the rectangle and that low of the rectangle, which is good news. So the good news is this is the high that the market has been going, and this is the low the market has been going. Now, for you as a sniper, you are saying, good, perfect. I have cornered my prey. My prey has been going between up here and down there. I don't need to know where it will go. What I know is when it makes a move, I'm on it. You are ready to take your prey. But how do you do that? You do that by measuring. So like now, if you look, let's first pretend that this thing might run to the top. So let's measure this distance to the top of your rectangle. So we measure that, and we find that it is about 36 pips. Okay, so from here to here is 36 pips. Okay, and then from here, the next resistance would be somewhere there. So let's measure that. That's about 37 pips, which means we can do, if that's 37, we can do 39 pips below here. So from here to here, we can actually set our trade here, our trap here. Okay, why not here? Because there's a bit of resistance here, support, okay, on this wick. And then if you look on the left, there's this long candle here. So you don't want to, you don't want to put your trade over there. You want to put it after it has shown that it wants to go down. So you look at the last low you have, which is here. Okay, and then you take 2 pips below there, around there, and right there is where you enter. You say, now if it comes here, I will do a pending order. I will do a sell stop. Okay, I've done that, but just by clicking sell stop. Okay, but how many pips do I want? Now remember, if you're entering here, if the market is going to go down and entering here, you want to take only like 10 pips. Okay, if it's 4 hours, you can even take 20 pips. But if it's 1 hour, I highly suggest 10 pips because of the market volatility right now. So because this is 4 hour, let me see where the next support is. The next support is not very far. It is on the left hand side where this long thing is at the bottom there. So let's see, that is about 40 pips. We don't want 40 pips. We'll just take 20 pips from there. 20 right there. So if it's 20 pips, then I modify that trade. Okay, so I come back and modify the order. Okay, and on my take profit here, I just say 20. Okay, stop loss 35, and then modify. Done. So if you look now, we do have, okay, a trade. You set up pending order, and you're saying after 20 pips, I want to take that profit and I'm out. All right. Now, what if your animal does not come down? Well, it can only come down or go up. So for that reason, we go up here and ask ourselves what's the distance between this one and the last major resistance here. Well, it is probably how many pips? It's 34 pips. So 34 pips, we can set, if it breaks there, we can enter there. So we can set our buy stop. Okay, it's called a buy stop right after that resistance there. So after this thing here, not on top of it, but about 2 pips above it. So I need to move it just a little bit. Okay, now, but in terms of taking profit, we want to probably not go beyond this thing here. So I think taking 20 pips profit would just be in order. So the buy stop, okay, take profit, all right, and then you modify. That's it. Yeah. So now if you look on our rectangle, at the bottom we have a trade and your take profit. At the top we have a trade, pending order, and take profit. All right. So in backtesting, what we normally say is we go back the charts and we pretend that the market is live and let's see what would happen. Okay. So I'm gonna move this as if we were on a live trade and let's see how soon our take profit will be hit.
Hey, coach, someone really walking and making a lot of noise.
Hello? Who's making noise there?
Somebody walking, I don't know.
Somebody's walking.
Right.
Can we? Who is walking? Who's walking?
Night or whatever, I don't know. 9 something.
Okay. All right. I think I've tried to mute all. I've muted all, but it seems like that mute all doesn't always work. Okay. I hope they will stop working soon. All right. Thank you. Okay. So let's see what happens to our trade here. Okay. So I will start pushing the button, the F12 or the right button, to see what happens to this trade. All right. The pending orders you've put up and down. All right. Right away, it has been hit by the next candle, and actually, it has taken profit right away. Amazing. We didn't have to wait for long. It rarely happens, but when that happens, you're done. The fact that we just left our trap, and the first candle has broken down to the bottom and has gone down and taken our profit. So right there and then we'll have gotten our 20 pips profit. Boom, finished. Now, I always suggest that once one part has hit profit, then you kill the other trade. You kill the other pending order. Why? Because the market can move very fast. Okay, like now it's going down, now it's coming up, going down. So it was actually meant to be going down. So this buy stop might not be hit for a long time. In any case, you already hit your profit. That's what you wanted. You wanted to go and get your kill either way, whether it goes up or down. So what have we done? What have we achieved? We've basically set up a trap for the market, and the market has actually fallen onto our laps, and we have taken our profit. That is what we call sniper trading. So I will recap. What do we look for when we are setting a sniper trade? We look for what we call a consolidation. All right. And what is a consolidation? A consolidation is a moment when the markets are seemingly just going up and down. They're not going anywhere. They seem to be just there. So this is like an uptrend. Okay. If it's going down, it's like a downtrend. But when markets are seemingly not going anywhere, like around here or there or there, as you can see, there are very many, very many. Those are all opportunities for you to trade. See, they say that the markets spend more time consolidating, going up and down, up and down, up and down, more than when it is trending up or when it's trending down. Okay? Which means for me as a sniper, you have more opportunities to actually enter and make some money. So if you look at any chart, almost any chart, like now, okay, I'm gonna delete this and I'm gonna go to any market. So now this was GBP USD. You might say, fine, maybe that was an easier one. All right, so let me first kill these trades. All right, so now I'm gonna go to which other market do I want? Okay, let's do GBP USD or AUD USD. Okay, that's another good market. All right, so that's 4 hours, but this time I'm gonna go down to 1 hour. I'm gonna go down to 1 hour. So what normally I would do, again, and this is going to be the reason for my big announcement towards the end. What normally I would do, I would wake up a little earlier than usual, to trade what I call the London breakout, because the London breakout during the Asian session, the markets in New York and London are actually closed like the big banks. Okay, so the volatility at night is normally very slow because the Asian session, even though people are still trading, but it's not as busy as during the day. So you'll find that the highlight of most Asian sessions is something like this. Um, you'll think that there's nothing going on, but actually, yes, there is, but not much. See, something like this. This is typical in the Asian session, where the markets don't seem to be moving at all. Okay. So early in the morning, East African time, maybe around 6, okay, no later than 7:30. Zambian time, maybe 5 in the morning, no later than 6:30, 7-ish. Around that time, some of the banks in Europe start opening. And when they start opening, you'll find that whereas the whole night, they were just like that, and then down a little bit, then up a little bit, okay? Then the very moment those banks in London or wherever start opening, the big banks, suddenly that movement changes, becomes active. And that's where you become alive. Because remember, all along you were just in this little space. You are confined a little space. Okay. And now you're saying, when the markets start moving, I want to come in. All right. So we as snipers will be setting pending orders. Pending orders because the market is moving like this the whole night. Okay. We come and we draw a line on top. We draw another line at the bottom. Okay. And those are the tails or the necks, whatever you want to call them. But these little things here, we call them the wicks. Okay. So make sure that your two lines or your rectangle encompasses or encloses those ups and downs. Once you've done that, then you check if there's any kind of support or resistance on the upper side or below. Often there is, if you look far enough. So you want to make sure that you don't enter your trades in between. Don't be boxed in. Like now, this thing here, I would not take a trade anywhere before that point. It has to be after. So your trade can only be after that. Okay? And then on the top, the same thing. Make sure that your trade is not before your top here, preferably even the wick over there. So it means that this space here, you don't trade. What you'll do, you'll put your pending order above, like 2 pips above the last high. So this is where you actually enter your trades, above your pending order For 1 hour, you just do like 10 pips. And again, here below, pending order. Okay, there. Now, do you need to be right? Do you need to be perfectly right? No, you don't. Do you need to know where the market will go? No, you don't. So, what guarantee do you have that your trade will trigger? 100%. The trade will trigger. The problem is timing. Timing is usually the problem, because often, if like now, if this was a time and you don't put your trades early enough, you'll end up missing the opportunity. Okay, so like here, you want to put your trade, you put your pending order above that and your pending order below that. Okay, so you measure, okay, and then you put your buy stop, click on that, and then you measure down here, make sure there's nothing else, you put your trade over there, sell stop. Okay, then you put 10 pips, 10 pips. So you go back to the trade here and you modify, okay, and you put 10, 1, 0. Okay, your stop loss 35 or could be more. Okay, then you take the other trade, 10 pips, that's what you want. So you modify the trade. Okay, you want 10 pips, that's it. Stop loss 35, it could even be 50, but you don't really care. Okay, there. So we have our two pending orders. Remember, we are snipers, we don't care where the market will go. All we know is if it goes up, I'm gonna enter, get my profit. It goes down, I'm gonna enter and get my profit. All right, so let's see what happens here. So here, as we keep clicking forward, this is what happened. So the market is going down. Look at this candle here. Okay, it's gone up, up. It has triggered. Now this can be a problem, and that's why we need to be very careful where we put our trades. See, this one now has triggered that by the wick, even though it's still slightly above, but sometimes it triggers. If it does trigger it, then it almost took profit, almost. And that could be a problem, all right? Because now it's going in the opposite direction. Now, this is how you lose a trade. It might go and trigger and go all the way and almost take a profit, but does not take a profit. And then it comes down, okay? So let's wait and see what happens. Okay, it seems like it wants to go back up again. Still playing around, it's going up, going around. After so many hours, it finally goes up, confirms, triggers the trade, but still does not take profit. And then finally, it takes the profit. Now, that was a long wait. So sometimes you might take a trade and it takes 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Now, for me, after waiting for 12 hours, no, that's too long. You get out of the trade. But if you had the patience, it will still come back and eventually take your profit. As you can see, it did come back here and take your profit. It triggered the trade over here, but didn't take profit. But it had to wait all the way until it took profit. Now, in sniper trading, we always say there's a time limit under which you want to wait, after which you come back and you kill the trades. Okay? All right. That was a quick example. So you kill both trades. All right. So what do we normally look for when we want to set up our sniper trades? The answer is we look for a market that is usually volatile, that moves very fast, okay? Moves a lot, like GBP, USD, USD, JPY, like AUD, USD, like Euro, GBP, USD, CAD. Those are some of the markets that move fairly fast. All right. And then once you've opened them, you look for where the market is consolidating. Okay. Where, like I've mentioned to you, where something like this is happening. So you draw a rectangle, or you can also use just a horizontal line. You can do a horizontal line like that. Okay, like that. There. Once you've drawn your horizontal line, then what do? Then you do set up your trades. You want to look here on the bottom. You make sure your trade is after these things over here. Otherwise, these things will mess you up. And at the top, it has to be above the last week, the last high you have there. So the top one will be easy, somewhere around there. You right click and you do your buy stop. Okay. The bottom one, after all those, you right click and you do your sell stop. Okay. Once you've done that, then you determine your profit. Okay. If it's a 1 hour, you just do 10 pips. So 10 pips, you come back here, modify, and you capture your 10 pips. And because you're sure of the trade, the stop loss can be as high as you want. It doesn't really matter. It can even be 100 at this point. Okay, it's just a way of safeguarding your account in the event that there's news or something happens crazy, so that your account is not blown. Then you go to the other one, you modify, take profit, 10 pips. Okay, and your stop loss can be 100, and you're good to go. Okay. All right. And that is how you become a sniper trader. Now, how many times can you do this? You can repeat the trade. If you're very, very comfortable and you have a good balance and so on, you don't have to put one trade. Okay. Again, this is now like the next level. Once you're comfortable with just taking the trades up and down, so this first one, you can even take it like 5 times. 5 times, and the bottom one 5 times. So you can increase the number of times you're taking each trade. So like that first one there, I can go back, right click, do another buy stop. Okay, I can go back, same thing, do another time, 5 times. And then each time I go back and modify. Why? The reasoning is when the market, when it starts moving, when it goes up, it will trigger all of them at the same time. It won't trigger one, then no. It'll trigger all of them at the same time. And it will take profit of all of them at the same time. So you'll have had 5 trades that you know for sure getting 10 pips. So 5 times 10, you get your 50 pips, just like that. And similarly, if you're doing a sell trade, you can say 2, 3, 4, 5 trades. Okay? And that's it. So I will maybe open it up for 1 or 2 or 3 questions, and then I have 2 big announcements to make. It was very simple and very clear, was it?
Yes, thank you, Coach. Just a question.
Yes.
What time did you say was good to set up the pending orders, Kenyan time?
Kenyan time should be around 6:30, 7:30 in the morning latest. 7:30 in the latest. Because at that time it's 6:30 in London. You want to set up it before 7:30 London time, so that you can